I'm chilling here outside of my office in Las Vegas. For those of you who don't know, my friends and I actually have a blockchain co-working space here. We're in a challenging time in the industry where a lot of people are asking themselves what's going to happen next. For me, it actually feels very familiar because this is the third crypto crash that I've been a part of, and every time it just keeps getting bigger and bigger. If you're feeling negative on the industry, I would really encourage you to start thinking about the possibilities of where things might head as Wall Street starts coming in. And I've been thinking about this a lot lately because I run a business and I'm in the process right now of forming a broker dealer, and it's costing me personally a lot of money to start it. I think there's a question of why do I personally have such a strong belief that this industry is going to keep growing. First of all, Wall Street is looking for ways to come in. The problem is that with this whole utility token asset class, it's so complex that nobody can understand it. I spent last year speaking at a couple of broker-dealer conferences really with the mission of trying to understand what it's going to take to get Wall Street in. First of all, Wall Street is just now starting to understand Bitcoin. They're really not on ICOs yet. They're barely on Ethereum. Some people, of course, are advanced beyond that. When you look at private wealth management and family offices, and really what wealth management advisors are being asked right now, it's very basic. It's still on Bitcoin. So the question is like, even if we came up with a structure, which I have one in mind, even if there was a structure that allowed them to easily invest in the asset class, would they even invest? And today the answer is still no. Looking at the fact that private wealth management today isn't ready to invest in ICOs, are hedge funds ready to invest? And the answer is, for the large part, still no, because utility tokens are so incredibly difficult to understand. And think about it. First, you read the white paper, and you usually don't understand how the token works after that. So then you read the tokenomics document, and after that you still don't understand it. And then you have to get on a call with the management team. Hopefully they explain it a little better. But frankly, it's too many steps to make it a widely demanded asset class. I believe that there will still be a long-term niche investor market for utility tokens because there are certain models that I believe have merit. I'm personally a big fan of exchange utility token models. But by and large, it's just too complex. Because think about how asset managers are able to review a project today, or a company. We call it projects in the industry. First, they review a company's financial statements, and from that, they're able to tell pretty easily whether or not an equity investment makes sense. And equity is similar across all these companies. It's a very easy to understand, widely understood, and widely known asset class. So the implication of this is that the crypto market is going to transition more into traditional asset classes. I really fought this, to be honest, for the past 6 months because I don't want to see things go towards a more traditional route. And I think there's a big question to be asked. What's even the innovation there? I've come to the conclusion that there's a huge innovation here, and it really revolves around Reg A plus offerings in particular. Because with Reg A plus, which was introduced through the Jobs Act maybe 5 or 6 years ago, it paved way to have these mini public capital raises. Sounds a lot like an ICO. The fact that companies can raise $50 million through a Reg A plus offering begs the question, why aren't these happening in a large way yet? And it's really comes down to technology. Token technology is the perfect fit, and really it's the missing link for Reg A plus. And so as the SEC starts approving Reg A plus offerings, and more specifically, as the SEC starts approving Reg A plus token offerings, we're going to start seeing a big boom in this space, and this is when Wall Street is going to come in. Now, just having security tokens be approved by the SEC doesn't mean that investors are even capable of investing in these types of offerings. And that really starts to come down to the second big obstacle that we have today, which is custody. No broker-dealer level, no institutional custody solutions exist for tokens yet. And that's going to come online in the next 12 months. So what does this all mean? As custody solutions start coming online and as Reg A plus offerings start using tokens as the asset that people are physically investing in, this is going to lead to a big boom in security tokens. And that's the next big wave. And that's why I'm starting a broker-dealer now. When this transition starts, here's what's going to happen. People are going to be investing using very similar techniques to what they've been doing in ICOs over the last year. So that means that all these investor onboarding portals are going to become even bigger. People are going to still be investing in security tokens using Bitcoin, Ethereum, and all sorts of other cryptocurrencies. And that has really big implications on our industry, because when we see this shift start to happen, it means that we're going to see increased demand for Bitcoin and increased demand for Ethereum, and prices are going to start to shoot up again. That's going to pull prices up again for all these utility tokens that have been suffering the last couple of months. All this is going to lead to a huge business opportunity for all of us. So my advice right now is stay calm, start a company, and really think about how you're going to take advantage of the security token boom that's about to happen in the next 6 to 12 months.